In a remarkable turn of events, Bitcoin and other cryptocurrencies experienced a significant resurgence on Wednesday, April 9, 2025, following a pivotal announcement from former President Donald Trump regarding U.S. tariff policies. The cryptocurrency market, which has been navigating turbulent waters in recent months, saw Bitcoin rally to over $81,000 per coin, marking a 6% increase within a single day. This dramatic shift was largely attributed to Trump's decision to pause tariffs on several countries for a period of 90 days, a move that many investors interpreted as a potential stabilizing force for the broader economy. The price of Bitcoin had initially hovered around $77,000 before the announcement, during which the cryptocurrency market had been grappling with uncertainty stemming from escalating trade tensions between the US and China. The situation had led to a general risk-off sentiment among investors, causing a downturn in crypto prices as fears of a potential trade war loomed large. However, the news of the tariff pause, particularly the lowered reciprocal tariff rates for most countries, while maintaining a steep 125% tariff on China, appeared to restore some confidence in riskier assets. Charles Hoskinson, co-founder of the Cardano blockchain, weighed in on the situation, stating, "This is the greatest example of why we need blockchain cryptocurrencies." He emphasized the need for decentralized financial systems that could mitigate the influence of political decisions on the global economy. His perspective resonates with a growing chorus in the crypto community advocating for a shift away from centralized power structures. Analysts noted that the recent tariff policies have had a chilling effect on cryptocurrencies, even though these digital assets do not directly correlate with tariff implementations. "This environment is very much a macro-driven environment," explained John Todaro, an analyst at Needham & Company. He pointed out that market sentiments around fiscal policy and trade relations significantly impact crypto valuations, which tend to be viewed as volatile and speculative. Notably, other cryptocurrencies followed Bitcoin's lead, with Ethereum climbing to $1,630 and several altcoins including XRP and Solana each registering increases of over 10%. Investors began to view these price movements as a sign of renewed interest in the crypto space, often referred to as a trust layer alternative to traditional financial systems. The implications of Trump's tariff pause extend beyond the cryptocurrency sector. With the potential for reduced economic strain and inflationary pressures, equities in the U.S. markets also responded positively, with the Nasdaq and S&P 500 indices experiencing notable gains. This broader market uptick reflects a collective sigh of relief among investors who had been bracing for further economic instability. In tandem with these developments, Kraken, a prominent cryptocurrency exchange, announced a partnership with Mastercard to facilitate crypto payments across Europe and the UK. This collaboration aims to enable Kraken customers to spend cryptocurrencies at over 150 million merchants, marking a significant step toward mainstream crypto adoption in everyday transactions. The co-CEO of Kraken, David Ripley, remarked, "Crypto is transforming the payments industry, highlighting the growing relevance of digital assets in global commerce." As the market digests these recent announcements and their potential ramifications, the future of cryptocurrencies appears to be on more stable footing. The evolving landscape suggests a possible shift in how cryptocurrencies are perceived and utilized, particularly in reaction to macroeconomic factors. With ongoing discussions in the U.S. around regulatory frameworks and the strategic positioning of digital assets, stakeholders are keenly watching how these developments will unfold in the coming weeks and months. In conclusion, the intersection of cryptocurrency and traditional economic policies is becoming increasingly evident, as demonstrated by the recent rally in digital assets following tariff announcements. As the world navigates these complexities, the dialogue surrounding the role of cryptocurrencies in providing alternatives to traditional financial systems is likely to intensify, pointing toward a future where digital currencies may play a pivotal role in shaping global commerce. In a notable turn of events, Bitcoin has shown resilience amidst a backdrop of escalating trade tensions, demonstrating a surprising ability to stabilize as market participants react to President Donald Trump's recent tariff announcements. On Wednesday, April 9, 2025 Bitcoin's price climbed 0.9% to $77,725 per coin, recovering from an earlier dip as optimism grew that the US's aggressive tariff policy could rekindle interest in cryptocurrencies. The rise in Bitcoin's value comes at a time when the cryptocurrency market has been under pressure, having experienced significant declines this year as the initial euphoria following Trump's 2024 election victory began to wane. The latest downturn was exacerbated by a series of tariffs imposed on multiple nations which had sent ripples through global markets. However, the situation took a dramatic turn when Trump announced a 90-day pause on reciprocal tariffs for countries that had not retaliated against the U.S., while simultaneously raising tariffs on China to a staggering 125%. Charles Hoskinson, co-founder of the Cardano blockchain, highlighted the growing importance of decentralized technologies during his remarks at a conference in Paris. "I think actually what's happening right now is the greatest example of why we need blockchain cryptocurrencies," he stated, asserting that the current geopolitical climate illustrates the need for a more collaborative and decentralized economic framework. His comments resonate with a broader sentiment that cryptocurrencies could serve as a safeguard against central power dynamics that threaten economic stability. Supporting Hoskinson's views, analysts are starting to perceive a potential shift in investor perspectives. Gautam Chugani from Bernstein noted that the prolonged stability of centralized financial systems has left many investors blind to the benefits of decentralized technologies. He explained the world for the first time may consider decentralized technologies that can form the alternative trust layers, suggesting that market conditions might prompt a re-evaluation of the value cryptocurrencies can provide. The market responded positively to Trump's announcement, with Bitcoin surging to as high as $82,715, marking an increase of 7.4%, while altcoins like XRP and Solana recorded even higher gains, reinforcing the notion that digital assets are becoming increasingly viewed as viable investment options in uncertain times. Paulo Ardoino, CEO of Tether, emphasized the potential for cryptocurrencies to gain traction as more countries face challenges in meeting new import duties. He noted more people in these countries will seek to have the dollar and access to the dollar, further underscoring the demand for stablecoins in periods of economic instability. The recent developments signify a complex interplay between traditional financial markets and the burgeoning cryptocurrency space. Historically, Bitcoin has demonstrated a degree of correlation with equity markets, particularly the tech-heavy Nasdaq Composite. However, its recent performance suggests a growing acceptance among investors as a hedge against market volatility. Joel Kruger, market strategist at LMAX Group, stated investors are increasingly waking up to Bitcoin's underlying value proposition, particularly its allure as a hedge during times of global market turbulence. As this dynamic unfolds, the implications for cryptocurrency adoption and regulatory discussions are profound. Analysts believe that as long as trade tensions persist, the crypto market may continue to attract interest as a decentralized alternative to traditional finance. Looking ahead, the confluence of political maneuvering and economic uncertainty could further catalyze the integration of cryptocurrencies into broader investment strategies, paving the way for a potentially transformative shift in how we perceive value and conduct transactions in a globalized economy. In a significant market shift, Bitcoin has surged over 7% following an announcement from former President Donald Trump regarding a temporary pause on tariffs. This rally, witnessed on April 9, 2025, saw Bitcoin prices climb to approximately $82,350, marking a notable recovery from a recent low of around $74,567. The broader market, including tech stocks and other cryptocurrencies, reacted positively to Trump's tariff news, indicating a renewed sense of optimism among investors. Trump's announcement on his social media platform Truth Social detailed a 90-day suspension of tariffs on countries that have not retaliated against the United States, while simultaneously increasing tariffs on China to a staggering 125%. "I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately," he stated. This move is seen as a strategic effort to ease trade tensions and potentially stimulate economic growth, which has been reflected in the stock market's response. The Dow Jones Industrial Average experienced its largest rally in 5 years, rising in tandem with cryptocurrency prices. The immediate effects of Trump's announcement were evident across various sectors. Bitcoin proxy stocks such as MicroStrategy and Robinhood saw impressive gains of 25% and 23% respectively. Other major players in the cryptocurrency market, including Coinbase, also experienced a 20% increase, underscoring the cryptocurrency market's correlation with traditional equities. Notably, Bitcoin's recent rise comes despite being down approximately 25% from its all-time high earlier this year. Market analysts suggest that Bitcoin's price movements are becoming increasingly aligned with the performance of tech stocks. Since last Thursday, Bitcoin has been taking its cues from the equities market, with traders looking for clarity around the Trump administration's tariff plans, noted Zach Pandal, head of research at Grayscale Investments. He emphasized that long-term investors should prepare for a sustained dollar weakness and inflation, which have historically followed periods of trade friction. Furthermore, the broader cryptocurrency ecosystem is experiencing a resurgence of interest, with not only Bitcoin but also altcoins such as Ethereum and Solana posting double-digit percentage increases. The stabilization of Bitcoin's price amidst ongoing trade tensions has sparked discussions among industry leaders about the potential for cryptocurrencies to serve as a viable alternative to traditional financial systems. Charles Hoskinson, co-founder of the Cardano blockchain, noted all of this assumed the current status quo rules-based order forever. The world for the first time may consider decentralized technologies that can form the alternative trust layer. The interplay between cryptocurrency and global economic policies is becoming increasingly complex. Analysts like Gautam Chugani from Bernstein highlight that the current geopolitical climate may prompt more investors to consider cryptocurrencies as a hedge against traditional financial systems. Tariffs could accelerate the uptake of coins as more countries will have a harder time meeting new import duties, remarked Paulo Ardoino, CEO of Tether, indicating a potential shift in how individuals and nations approach the use of digital currencies. As the situation develops, market observers will be closely monitoring both the potential impacts of Trump's tariff policies and the evolving landscape of cryptocurrency regulation. With the recent surge in Bitcoin prices and increasing interest in digital currencies, the coming weeks are likely to be pivotal for both the cryptocurrency market and the broader economic environment. Investors are advised to stay vigilant as they navigate through this fluctuating landscape, which is set against the backdrop of international trade tensions and regulatory changes. As of April 9, 2025, Ethereum ETH, the world's second-largest cryptocurrency, has plummeted to its lowest price in 2 years, trading below $1,500. This decline, marked by a staggering 64% drop from its December 2024 peak of $4,100, has sparked widespread concern and speculation within the cryptocurrency community. The downturn is not merely a market fluctuation but rather a response to broader macroeconomic shocks, particularly the recent imposition of tariffs by the Trump administration, which has sent ripples through global financial markets. The price of Ethereum has been on a downward trajectory for several months, with data from CoinMarketCap revealing a 30% decline in the past month alone and nearly 6% in just the last 24 hours. The total market capitalization of Ethereum has also dramatically diminished, now standing at approximately $178 billion. This bearish sentiment has led to significant liquidations, with over $400 million in Ethereum positions closed in the last day, predominantly from long positions. Such a deleveraging event typically reflects fear and panic selling, particularly in risk-sensitive environments. The current climate highlights a historical struggle for Ethereum against Bitcoin. Although Bitcoin has often been viewed as a safe haven in turbulent times, often referred to as digital gold, Ethereum has lagged behind. The ETH/BTC trading ratio recently fell to 0.018, the lowest since December 2019, indicating a growing disparity in investor sentiment between the two cryptocurrencies. Tracy Jean, COO of crypto exchange MEXC, remarked that Ethereum is entering a concerning phase with signs of fatigue evident in on-chain activities. Metrics such as daily transactions, gas usage, and DeFi volume are on the decline, suggesting that users may be shifting to other platforms that offer better scalability and cost efficiency. The cause of Ethereum's decline can be traced back to the tariffs announced by the Trump administration, which are set to escalate from 10% to 25% on various imports, targeting key trading partners. The effect of these tariffs extends beyond traditional markets. They threaten to increase inflation and slow global growth, thereby pushing investors towards more stable assets like gold and the US dollar. Dr. Kirill Kretov of CoinPanel articulated this sentiment, noting that the rapid fluctuations in Ethereum's price since early November have been perplexing, attributing the volatility to a combination of market reactions and investor sentiment rather than isolated events. In a further complication, World Liberty Financial, a DeFi project linked to the Trump family, recently sold a significant portion of its Ethereum holdings. The wallet associated with the firm offloaded 5471 ETH at around $1,465, realizing a loss of approximately $125 million after having purchased the tokens for $3.259 earlier in the year. This liquidation not only underscores the precarious state of Ethereum but also highlights the psychological impact of high-profile sell-offs in the cryptocurrency space. As Ethereum grapples with these challenges, analysts are contemplating its future. Some believe that the current price action could lead to a potential bottom around the $1,000 mark, a level that has historically provided support during downturns. Cointelegraph's fractal analysis points to past patterns that may repeat, suggesting that if Ethereum can maintain a price above $1,500 by the end of the week, a rebound toward the March 2023 highs around $2,121 could be plausible. However, if it falls below this critical threshold, further declines could be imminent. The ongoing situation with Ethereum serves as a microcosm of the broader cryptocurrency market, reflecting the vulnerabilities inherent in digital assets during times of economic uncertainty. As investors remain cautious, the prospect of a resurgence or a deeper downturn looms large. For those invested in Ethereum, the coming weeks will be pivotal in determining the path forward as market conditions and geopolitical factors continue to evolve. In a significant move that underscores the growing influence of blockchain technology in Washington, the Solana Policy Institute has announced the hiring of Colin McLaren, a prominent lobbyist in the Capitol. McLaren, who previously served as the engagement director for the Cedar Innovation Foundation, a group known for its ties to major players like Coinbase and Ripple, will now spearhead efforts to build relationships with lawmakers and regulators on behalf of the Solana ecosystem. The Solana Policy Institute aims to advocate for the interests of the Solana blockchain, which has garnered attention for its high-speed transactions and innovative smart contract capabilities. This strategic appointment is indicative of the increasing importance of lobbying in the cryptocurrency space as organizations seek to navigate the complex regulatory landscape. Colin is able to thread the technicalities of blockchain with the stories of real-world impact, a unique skill that is only growing in importance as regulatory clarity enables increased innovation in the crypto industry, said Miller Whitehouse-Levine, CEO of the Solana Policy Institute. McLaren's background is noteworthy, having played a pivotal role in the Cedar Innovation Foundation's recent political campaigns, which included aggressive advertisements against former Ohio Senator Sherrod Brown. His experience in political strategy, combined with a history as a Democratic operative for high-profile presidential campaigns, positions him well to influence policy discussions related to blockchain and cryptocurrency. The Cedar Innovation Foundation itself has been a controversial entity, often labeled a dark money group due to its lack of transparency regarding donor disclosures. Nonetheless, it has made significant strides in shaping the political conversation around cryptocurrency, often aligning with industry interests. The foundation reportedly received substantial funding from Coinbase and Ripple, both of which are major stakeholders in the blockchain space. In conjunction with McLaren's hiring, the Solana Policy Institute also recently appointed Kristen Smith, the former CEO of the Blockchain Association, as its president. This dual leadership strategy aims to solidify the Institute's role as a key player in Washington, especially as various blockchain projects vie for legislative attention and support. As the crypto industry looks to capitalize on recent political victories, including favorable outcomes in the November elections, the Solana Policy Institute is positioning itself to be at the forefront of these developments. With a team consisting of seasoned advocates and experts, the organization is focused on elevating case studies from the Solana ecosystem to demonstrate the technology's real-world benefits to policymakers. The broader implications of these developments are significant. As blockchain technology continues to evolve, the need for regulatory clarity has never been more pressing. McLaren's appointment signals a concerted effort by the Solana community to influence policy in a way that fosters innovation while addressing the concerns of regulators. The potential for increased collaboration between the crypto sector and lawmakers could lead to a more conducive environment for blockchain adoption, ultimately benefiting the industry as a whole. Looking ahead, the Solana Policy Institute's proactive approach may set a precedent for how other blockchain organizations engage with government entities. The success of this initiative could pave the way for a more structured dialogue around the future of cryptocurrency regulation, ensuring that the interests of the blockchain community are represented in the halls of power. As these dynamics unfold, all eyes will be on Washington to see how effectively the Solana Policy Institute can advocate for its ecosystem in an increasingly competitive landscape.